Hey everybody, what's going on? It's James here with Crypto Common Sense, and I have your Bitcoin/cryptocurrency update for December the 15th. Before I jump into the content of this video, please do me a huge favor, hit the thumbs up button on the video. Don't forget to subscribe to the channel, and also don't forget to click the bell notification if you haven't already. So before I jump into any charts, I wanted to say something about yesterday's video. Nobody said anything about it on YouTube, but one of the people in my Facebook group actually did catch an error in the video, and I wanted to mention it today because for easy math, I was actually doing the cost averaging by saying, okay, if you bought one Bitcoin at this, one Bitcoin at this, one Bitcoin at this, and that's not actually dollar cost averaging. Dollar cost averaging works a little bit differently. So instead of saying, I'm going to buy one Bitcoin on January 1st, one Bitcoin on February 1st, one Bitcoin on March 1st. It actually is more of a case where we might say, I'm going to buy $1,000 worth on January 1st, $1,000 worth on February 1st, so on and so forth. So you're actually putting in the exact same amount of money each time versus buying the exact same amount of the asset. So it does make a difference. I think in yesterday's video, I said the cost average would have been somewhere around $7,900 if you had done that. In reality, it would have been closer to $7,260. So it doesn't seem like a lot. It's about a 10% difference. So it is significant. I did want to point it out because my intention wasn't to mislead anybody. It was just that I was, doing a video, and for easy math, I just did it that way. And then after the video, I was like, shit, that's not actually how that works. So yeah. So if you ever see a video and you see me make a mistake, please feel free to point it out. I obviously don't know everything, and I'm always happy to go back and say, you know what, you're right, I did make a mistake. This is actually how that works. So with all that out of the way, the first chart that I want to look at today is actually this chart. And the reason that I want to talk about this chart, and you probably want to blow the video up full screen to really be able to see these charts, but sometimes people overcomplicate trading. And if you get on social media, you'll see people talking about a lot of really fancy words and all this different stuff, stock to flow ratios and order flows and on book volume and all this kind of stuff. And it's like, if you're new, you're going, oh my God, I don't know what any of that means. And the reality is you really don't need to. Okay. The first trading course that I ever took was from a guy that had traded successfully on Wall Street for a few decades. And he used moving averages, price action, and RSI, and nothing else. And he did just fine like that. Me personally, I use a little more than he did. But, one of the things that he had said in this course, and I'll never forget this because it seemed so counterintuitive. He had said in this course, the more indicators that a person uses, typically the weaker trader they are. Now, I'm not saying that everybody who has a bunch of indicators is a weak trader. I'm just saying that the point is you don't need to know all of that stuff, and you don't need 800 things on your chart. If you take a look at the charts on the screen, this is 4 different bear markets. Each bear market is a Bitcoin bear market. The first one up here is the Bitcoin bear market from 2011. The second one is the Bitcoin bear market from 2013. This topped in 2013. The third one is the bear market that started in the top 2017. And then finally, we have this current downtrend that started back in June of this year. The orange line that you see on the chart, it's a 200-day moving average. Now, if you come from stocks or if you come from FX, Forex, you're automatically going to know, okay, yeah, that's a 200-day moving average. It's a pretty standard line. Most professional traders are going to have that on the chart. They're going to pay attention to that. They may not have it on the chart all the time, obviously, but they're going to know where that line is at, right? So if we just take a look at this line and nothing else, we forget all about RSI and all these other indicators. And these markets all look very, very similar. And you'll notice that every time a bear market went under the 200 moving average and then the 200-day moving average started to turn down, that was basically about the halfway point before that bear market was over with. Okay, you can see it here. It turned down about halfway through the bear market, and then boom, another 6 months and it was over. You can see here that it turned down, right? It started back in November. It started to turn down around June, and it finally ended in January of 2015. And 2017, right? The top was in December. It started to turn down around June, and finally the end was in December. In 2019, it just now started to turn down, right? Our top was about 6 months ago. In fact, it was 6 months ago, and about 2 weeks from now, it'll be 6 months from the top. And it's just now starting to turn down. So in each one of these cases, that has marked the halfway point of the bear market. So when I look at that, and then I see people on Twitter saying, this is the bottom, with absolutely no structure to support it, I don't understand it. And when you look at it and you really dig into it, it's all based on hopium. It's all based on one thing. They're basing it on the fact that every time there has been a halving, the price of Bitcoin has shot up after that halving. So you got to decide which side of the fence you're on. Are you on the side of the fence that says, hey, the halving is coming up, it's going to pump? Or are you on the side that says, I'm going to follow technical analysis and this has a lot lower to go? Now, that being said, I want to point this out that typically when you break underneath the 200-day moving average in any market, you typically get a bearish retest. We had that right here. We had another false break right here. But I suspect that fairly soon, we're going to get another retest of this line. We may go down to 6,000 or 6,200, before that happens. But I still, deep down, I just absolutely suspect that this thing is going to pump back up and test that 200-day moving average before it goes anywhere near the old lows, right? And if you look again at these charts, that's typically what happened when it had a false break above it, came down, had another test of it, another test of it, another test of it, right? And they just tend to ride and repeatedly test that line. Same thing happened in 2014, right? Came up to it, tested it, fell, false break, tested it, tried to come back up to it, right? 2011 was a little different because when it fell underneath it, it really didn't have a bearish retest. It just fell and then came back up and just rode right along it for several months, which was a little bit odd, right, compared to these others. So I thought I'd point those out. Again, if you want to get bullish on Bitcoin, you need to look for bullish structure, number one. And number two, you really want to see the price break above the 200-day moving average and preferably have a bullish retest where it comes up above it, comes down and retest it, and then moves up off of it. So far, we haven't had that, okay? Now, a weird little caveat with that 200-day moving average, and I've talked about this in past videos, is if you look at the 200-day moving average on the CME chart, it's different because the CME is not open on, from Friday to Sunday. It actually closes from Friday evening to Sunday evening. So its 200-day moving average looks a lot different. And it was interesting to me that we did get a bullish retest. Back here, broke above it. That's a bullish retest. That's what I'm talking about. And over here, it was support before it bounced up. So maybe the bearish retest we get is going to be up to this line. Instead of going all the way up to 9,000 or 9,200, maybe this ends up being the line in the sand, right? So I'll be keeping an eye on that. So speaking of the CME, it's getting ready to reopen. It may actually be open. I don't remember what time this thing opens on Sundays. I don't trade the CME. I think it's 5 Central Time. I think it should be open. I have delayed data, so maybe it's 5:30. Anyway, this thing is going to be opening pretty soon. It closed at 72.65 on Friday. So if we look at this, we're going to have a gap unless price shoots up before then. If it opens where it's currently at, price is currently right at $7,100. So we'll end up having a gap that looks like this. Price will open way down here. And it's done this the last couple of weeks in a row. And then it's, almost immediately filled those gaps in. So, it could go up here and shake out some shorts. I'm not in a position right now, by the way. I was in a long yesterday and I had a trailing stop on it that got hit at 70.40, which was super frustrating. It got hit right about here. This tail right here hit my trailing stop. I'd entered over here, got stopped out on this tail, and then it did this crap. I did short this, but I closed it on the drop, and I haven't done any trading whatsoever today. All I did today was hang out with my family and watch Aladdin. So, I'm not long or short. I'm just waiting for more structure on this thing. The daily is going to close in less than an hour. The one thing about the daily that I will say is interesting is if you look, we have tweezer bottoms right here, right? We've got this red candle with this tail that came down to right at $7,008. We've got this candle that came down right to 7,006. Tweezer bottoms often act as reversal signals where you're going to get some type of pump up off of that. I would, like this more if this green candle had more of a body to it. So if it gets a pump in the last, hour or so here, that would be nicer for a bullish signal. But it is something to consider if you're thinking about shorting this thing right now. I don't see any short setups. Again, I'm still bearish, but I don't trade based on, my emotion or based on my bias. I trade off of setups, and right now there's not a setup here, at least not one that I see. When I look at the hourly, when I look at the 4 hour, and I look at the daily, they all look pretty neutral on the as far as the setups go, right? So that's kind of what I'm watching. We had this triangle kind of look something like this. And I got too many lines in here. I've got to get rid of some of these lines. Okay. So we had this triangle that was kind of sloping down and sloping up like this. And then, of course, it broke out of it. If you drew it over here, of course, it broke out of it. And this looks like a bearish retest. I tend to lean that way because it was also a bearish retest of 7,198, which was the neckline of that little wannabe double top that I talked about a couple days ago. The only thing to remember is this could also be redrawn like this, right? This could end up being the triangle, which means that this could still pump up to the top side here, right? I mean, obviously it could pump up and break out, but it could still do this and then come down, right? Come up, fill in that SAMI gap, try to wash out some of the shorts at least, and then move down. So if we do get a move up like that, I'll be watching it to see if I can find a setup on the smaller time frame, maybe the hourly time frame or even the 5-minute time frame for a short position. Okay, but I'm not going to go willy-nilly and just go, oh, I'm going crazy, I'm going short, right? Because it could also, this could be the local bottom, right? This could be it. This could end up pumping up and going back up to 8,500 or 9 grand, right? I see when I go to Twitter right now, I have to be honest, it's mostly bears that I'm saying. There's still a few of the moon boys who never ever get bearish whatsoever. But as far as the people who like at least trade or semi-trade or pretend to trade, most of them are bearish right now, which is not what you want to see when you're going short, right? You want to kind of be against the crowd, I guess, so to speak. So it wouldn't surprise me at all if this thing just pulls an FU move and says, I'm going to do exactly what nobody thinks I'm going to do and shoots right back up to this $9,000 level, right? That would really wreck a lot of bears, and it would also get a lot of bulls super excited, thinking that, hey, the bear market is over. I'm seeing people call this, they're saying this looks like this back here. I disagree completely. I mean, I guess if you want to go like, okay, it dropped, went up, yeah, so did it like 500 other times, right? That's really not enough to go off of. I'll give them credit and say there's some similarities, right, in the candlestick pattern. There are some similarities there. But they're the same similarities that existed right back here, right? So if I have to pick which one of these I like more, or which one of these I think is more relevant, it's this one that just happened, right? I think we're going to get a repeat of something like this, where the thing drops down and then shoot, not that high, but obviously shoots up from there. So anyway, that's kind of what I'm saying on Bitcoin. Let's take a look at some of the altcoins. Let me pull up my YouTube channel so I can find out what people were asking about. By the way, if you guys were watching yesterday's video, YouTube offered to let me do monetization, so I clicked OK. I don't really know how it works. I've never done it before, and then I found out. I went and looked. All my videos get like 95% likes and above, and then yesterday I had 78%. And I was like, what the hell? Do people hate the video? And I realized they were putting ads at the beginning of the video, which was really annoying. So I went in there and like read through this stuff and figured out how to turn that off. So you shouldn't see ads at the beginning of the video anymore. I apologize for that. Let's see. Somebody asked for BTT BTC. I do not know what that is, but I will happily look. This looks too new to really do a whole lot with. It's less than a year old. I don't like these low volume altcoins, and I don't like new altcoins, right? that don't have enough history, because you really don't have any support and resistances to play off of. I mean, essentially, when you look at this thing, it's just moving in a straight line sideways, which makes it really difficult to, gauge what it's going to do. It looks like it's a 5-sat coin, which is dangerous. And you might say, why is that dangerous? Because if it moves down 1 sat, it's down 20%, right? So a lot of times when you get into these really low coins like this, there's not enough liquidity to actually trade them. So let's say you buy it 5 sats and it goes up to 6 sats. Well, that's a 20% gain. So everybody's trying to sell and take profits at 20%. It's really, really difficult to make these work, right? And that's why you get all these wicks and tails like this. So me personally, I wouldn't trade a coin like this, just for the simple fact that they're hard to get out of, right? If I was going to trade it, what I would say is it's got an upward sloping trend line on the daily, and that it seems to be have found support right around 4 Satoshis. So, if I was going to buy it, that's what I would look at. I'd maybe try to catch a tail down to 3, since there was a tail here, and then flip it. I mean, think about it. If you caught a tail at 3 and sold it at 5, that's a 40% gain, right? Actually, it's a 67% gain. Bad math in my head. But yeah, with it being so low, I mean, there's really nothing. You can't really chart it, right? It just looks like an EKG. So, what else we got? BSV. I think that's the other Bitcoin, right? Okay, so this is a daily. Pretty obvious head and shoulders back here. Hopefully anybody that was holding saw that and got out. But currently looks like it has come back down. Man, this looks eerily similar to the bottom of Bitcoin last year. Looks like it's come back down and tested that neckline. Which, if it had broke out and come down and tested it like this is bullish, right? Bam. But when it comes down off of the high and tested, it's not exactly a bullish thing. So that's not great looking. If we draw a trend line on the RSI, I tell you what, there's one thing that I hate about TradingView. It's the way these things pop up when you're trying to draw trend lines down here. So it looks like it had a bearish retest right here on December 13th. Looks like it came up and tested that and failed to break through it. So that's a bearish sign. And let's take a look at a 3-day chart where that had a false break above it. That would have been a sign to get out right there when it came back underneath that thing back in July. But essentially, I don't see anything in the 3-day that points either way. Let's look at the weekly. Weekly looks pretty bad. It looks bearish in nature, but there's not a setup there. It's not like I can look at this and say, okay, I should be shorting this right now. I don't think there's anything there that says that. Try to draw this look perfect here. It could be that this weekly RSI, that this does act as support right here. It would make sense if that acted as support, because you're getting down, right? You've basically filled in this great big liquidity gap right here. So you're moving down into this area that already had liquidity. And also, if Bitcoin itself finds a bottom, or at least a local bottom, it would make sense that this would also stop dropping. And it's going to pump with Bitcoin, like pretty much all alts. I mean, I can't guarantee that, obviously, but typically speaking, everything pumps when Bitcoin pumps. So its US dollar value should go up, unless it just does something completely weird. Let's go back to the daily chart real quick. It's done a really good job of filling in its liquidity gaps all through there. The one that's not filled in, though, and the one that I would be really nervous about if I was trying to invest in this, like long-term invest in it, I would be very nervous about this level right here at $63, right? Because that is a big gap, and it did not get filled in. Look at this. It had a gap from way down there all the way up there. Started to come back down, and then it didn't do it. This is odd, by the way. Usually when you go down and you start to fill a gap, usually you do go ahead and fill it. So this not filling it, that's not good. At some point, and I don't know that it'll be soon, but at some point I would expect it to come back down and fill that in. So 63 bucks is kind of the level that I might be interested in taking a positional long on that thing. But that daily just does not look good. Let's see what its 4 hour looks like. Four hour looks a little better, right? When you look at the 4 hour, it looks like it's having a bullish retest. But there's no, I mean, bottom line, there's no position there. There's no setup there, right? To me, personally, I wouldn't touch that with a 10-foot pole. I would just sit back and wait. That's me. Let's take a look at the Bitcoin pair for it. Bitcoin pair, let's go to daily. So no real trend line there. There is one here though. Look at this. You had a touch, a little false break under it, a little false break under it. Right, it hasn't been perfect for sure, but it did come up and test it there, and then it looks like it's trying to put in a double top on the RSI. So that's a little sketchy looking. What's the 3-day look like? There you go, right? Bearish retest right here. So that doesn't look great either. What's the 4 hour look like? Yeah, same thing here, right? Looks like a bearish retest. So, yeah, I don't see anything good on that one right now. What else we got? APL BTC. I don't see that one. Doesn't seem to be that one. So if whoever asked about that one, maybe it's something else you're talking about. I'm probably missing some. If I'm missing some, let me know, guys. I want to try to get your recommendations here, because it's boring talking about Bitcoin every day, right? I wouldn't want to watch a video every single day about Bitcoin, right? It doesn't change that much. So that's the altcoin picture. Let's look at the total market cap real quick, and then we'll start wrapping things up here. So we had a couple days ago, I talked about what looked to be a symmetrical triangle, and we've fallen out of that. That's not good, right? Fallen out of it. Looks like we're trying to come up for a bearish retest. Maybe it already did. Yeah, it did come up for a bearish retest. So that doesn't look good. Let's take a look at the... I don't remember where these trends pointed to now. It's been a week or so since I did this. Don't love that one. Doesn't seem to line up that. It lines up pretty well actually here, here, and here. So that's probably a good one to use. I don't love it, but okay, we'll go with that. So 52 billion is the next level, and then 41 billion. That 41 billion actually makes sense because of this gap back here. So that's a possible target on those alts if Bitcoin takes a bigger tumble. If we draw this like this, I like this a little better, right? Still gives us a target of around 52 billion for the next level of support, and then 44 billion for the full move, which again I like, right? That's actually with support back here. I like this. So those are the levels I'd be watching if you're watching total market cap. And let's look at the total including Bitcoin. So if we do the whole move, $161 billion would be the target, and then the 1.618 would be 66 billion. I know nobody wants to hear it, but I really do think this is a legit target. I really think that's legit, right? Right down at this level right here. Just, you know, lines up with old resistance. It's right below this bottom right here. I just think that's legit. I don't think that's as far-fetched as people are acting like it is. So the next level though for total market cap, I'm gonna watch this 161.69 billion on that. Okay, that reminds me of one other thing. I'll show you guys real quick. Talked about this in past videos, but I'm gonna mention it again real quick because it's been a while. if we look at the 200, somebody was actually arguing with me on Twitter earlier saying that Bitcoin has never went below the 200 moving average on the weekly. That's not true, guys. It has, right? It fell through right here. And then they say, okay, well, yeah, it fell through, but it didn't close. It has closed 5 times. 1, 2, 3, 4, 5 times it closed under the 200, right? And this is not a small amount, okay? If you look at this, like this right here, that's about a 13.5% drop under the 200 week moving average. So if we go over to 2019 and we pull this down 13%, just as an example, that would give a price target down around $4,300. Hey, guess what? What's that? Oh, that's right. That's right around the top of this old neckline, right? Not that far off. In fact, if you draw the neckline on the wicks, it's right at it, okay? So, this may hold like it held here and the last time. It may hold, but you still might get a wick that comes down through it, right? So don't forget about that. I see a lot of people saying, oh, if it gets to the 200, I'm going all in, I'm going all in. Well, that's poor risk management any way you cut it, okay? Not telling you what to do. It's your money. But just realize that, just like any other line of support, the more times it's tested, the weaker it gets. So again, it's possible a wick comes down. First of all, it's possible we never get there. But it's also possible that a wick comes down through it, all the way down to this level. So if you're using a lot of leverage, you could get stopped out, right? And if you're buying a spot and you're willing to hold it, it might not be that bad, unless, of course, it comes down under it, comes up for a bearish retest, and then keeps moving down. And if this moves down to around $2,000, let's just use that nice round number. Watch this. 66 billion, right? Okay, so if there are... and I don't know how many Bitcoin are mined or whatever right now. Nobody does. Nobody knows how many Bitcoin are actually floating around, right? Because there's some loss or whatever. But we're just going to use 21 million for a nice round number, okay? And let's say that they're worth $2,000 a piece. That's $42 billion. 42 billion, okay? So what's 66 billion minus 42 billion? Right around 24 billion. Where's the target? If this loses its bottom, it makes a new bottom, 21 billion. You see now that all that fits together. You take 21 billion from alts, you take another 40 or so billion from Bitcoin, you add them together, and suddenly that $60 billion target, total target, suddenly it's like, okay, well, that's not actually far-fetched at all, right? That actually has mathematical basis. Doesn't guarantee it'll happen, right? But it is something to keep in the back of your mind. Looks like I'm at 35 minutes before I edit the video, so it'll be a little shorter than that. So I'm going to go ahead and wrap up here. Please remember, I'm literally some guy sitting in a spare bedroom. Nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence before making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up. Also, don't forget to subscribe to the channel, and don't forget to click that bell notification. If you haven't already, you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can join my trading course if you'd like to learn how to trade. This is James with Crypto Common Sense. Trade safe.